Yeah, hello guys, welcome once again to Forex Success. Okay, so guys, I'm about to show you stepping this right now, the analysis, how to trade, and I'm gonna give you a signal at the end of this video, so you can also make at least some good money from step in this today. So guys, make sure you watch this video to the end. Yeah, watch this video to the end and pay proper attention, because you will love what you will get from this video. So this is going to be a long-term trade. As you can see, it's gonna be a long-term trade. You can see I placed a sell at this point, though the entry is early, but because I know where it's going to, I don't mind, because I'm gonna leave it there for some time. Okay, so guys, we're gonna be using just two indicators on this analysis. I'm showing you something, guys. I'm trying to show you how you can trade stepping there. So I'm gonna be doing it like I am trading it right now. So since I'll be doing it like I'm trading it right now with my own analysis, I believe you'll be able to learn from it and be able to do this yourself next time. So first of all, guys, I'm placing it on a daily time frame, seeing the price action. Using the price action, guys, we can see that stepping this is on a downtrend. Yeah, stepping this is on a heavy downtrend. As you can see from the daily time frame, the black moving average, the black SMA, which is the simple moving average, is pointing down, which indicates a downtrend and a long one at that. Then the red moving average is the EMA, which is the exponential moving average, and it's also pointing down, as you can see. So guys, this is a bullish candle that just closed the previous day, and today a red another candle which is going to come down probably to this point or even lower, more to the bearish side, favoring the sellers. So guys, what I'm seeing right now from the daily time frame, considering the fact that the black moving average is moving down, pushing down as a sell, the step index is going to continue the sell. And also seeing this resistant level at this point, guys, let me mark this out quickly. A resistant level at that point. Yeah, a resistant level. Let's mark that out quickly. Okay guys, please pay attention. That's a resistant level that I just marked out. Oh, let me mark it again. Sorry guys. Okay, great. Yeah, so this is a resistant level, guys, that we just marked. So there are more resistant level. This is aha. So guys, the resistant level I just marked right now. So we are expecting the market, as you can see today, the market moved to the upside, couldn't break through this resistant level. It's pushing back to the downside. Look, this has been a resistant level for long. It came from this market, starting from this point. It was a support level, proved this market backward. I'm using the daily time frame now, guys. I'm gonna break this analysis down from the daily down to the lowest time frame, so you'll be able to analyze the market with yourself using indicators and price action. So guys, the resistant level, which was the support level before, push this market at this point. Please guys, follow this cursor, as you can see, so you understand better. It pushed this market from this point to the upside. Then the market moved up, came down again at this point. It pushed it again before it broke through. You can see, guys, the market trying to go back up again at this point. The same support level pushed the market down to the downside. Again, the market went down, came up again, broke it. You can always see, guys, this level, this support level always make impact in the market. It either pushes the market backward before the market either gain momentum to break through or it bounce back. So this is a major, at this point it was a support level, but right now at this point it is a resistant level. So guys, this is a major point to look at trading this stepping this as of this time, daily time frame, guys. And the red and the black moving average, the SMA, is pointing down, a downtrend. So guys, we are advised, it is advisable to sell step index considering the daily time frame. Yes, it's advisable to sell step index for the daily time frame. So right now we'll move down to the 4-hour time frame. Moving to the 4-hour time frame, what we'll do right now is that, okay, seeing the 4-hour time frame, guys, again, this is the same. You can see the 4-hour time frame is still respecting the same resistance level. So for the 4 hours, it is a resistance level. You can see this, guys. For the 4-hour time frame, it is still respecting the same resistance level. The market is respecting the level. Let me zoom in a bit. Okay, you can see it's still respecting the same level. We can put this as a trend line, but that won't be necessary for now. Okay guys, so the 4-hour time frame is still respecting this resistance level, which pushed this market back to the downside. And the EMA, the exponential moving average, is still pointing to the downside. As you can see, it's still pointing to the downside, though the SMA moving average, you know, when the SMA moving average cross above, which is the red moving average, cross above the red moving average, it indicates a buy. Yeah, it do indicate a buy. So now guys, it indicated a buy. Crossing above, it indicated a buy, yeah, which brought about these bullish candles. But now, as you can see, red candles have been formed. Two massive bearish candles have been formed and they are still ongoing. So guys, this market is going to continue to the downside for the step index 4-hour time frame. If you check out on the 1-hour time frame, which is the next, you will see, guys, that the red moving average has crossed above the chart. Yeah, it has crossed above the chart at this point, which indicates a sell. A sell. Remember, the daily time frame, the black moving average is still on a sell, which is the overall. It's still on a sell. So even if the black moving average, even if for the 4-hour time frame, it's showing us a buy, it is just a consolidation. You can see it is just a consolidation. So moving the market down to the daily time frame, you will see that it is still overall sell. So going back to the 1-hour time frame, guys. This is the red moving average, which is crossing above the chart, which will give us a sell. And then considering the support and resistance level at this same point that put this market back, we are looking at selling step index. Guys, just two indicators. I'll show you the parameters for the indicators soon. So if you can see, it's currently on loss right now. It's currently on loss. Why? This is a long-term trade. It's not just a short-term trade. This is a long-term trade. So you can enter this trade. I'll show you everything you need to know. Okay, moving down to the 30-minute time frame. I think I'll do a video of this same. I'll do a desktop version of this video for better understanding, because the analysis will be clear if I do it on a desktop. Yeah, when I do it on the desktop version, it will be better. So for the 1 hour, for the 30 minutes time frame, zoom out. Okay, you can see, guys, for the 30-minute time frame, it is still crossing below. sorry, it's still crossing above, guys. The red moving average crossed above the chart for the 30-minute time frame, which indicates a sell. Indicates a sell. But considering if we're trading a short-term trade, guys, if we're trading short-term trade, we'll just simply use the fact that this black moving average crossed above the red moving average crossed above the back, which indicates a buy, and then make profits right here using the strategy. But now the red moving average is about to start coming down. It's about to start coming down at this point. Let's say when it comes down and the the black moving average move upward as well, there will be an intersection whereby the black moving average will cross above the red moving average, which will indicate a sell that we're going to get in this market. So moving to the 15-minute time frame, let me show you some more points, guys, on the 15-minute time frame. Good. So the 15-minute time frame, like I said, okay, let me give you a little example of the black moving average, which is the simple moving average. The simple moving average, it forms slowly, unlike the exponential moving average. The simple moving average forms slowly, and it tells you it tells you trends of the market, whether the market is going to be an uptrend or a downtrend. But it forms slowly, not as fast as the exponential moving average. So therefore, you can get late entries with the simple moving average, but the exponential moving average forms fast. But the pros behind the downside of the exponential moving average is that it might tell you is a trend, whereas even on consolidation, even when the market is on consolidation. So the simple moving average tells you what trend the market is going to be, but it tells you in a later time. It's not so fast like the exponential moving average. So guys, at this point, you can see that the black moving average, which is this, is about to cross above the red moving average, which indicates a sell. So 15-minute time frame is giving us another reason to place this sell. And looking at the support and resistance level also, we'll see that the market is going to sell. But as we all know, trading this market right now, the 4-hour time frame, you can see, and then we'll move down to the 5-minute time frame. The black moving average is still above. The black moving average crossed above the red moving average, which indicates a sell. So guys, this is simply what I am trying to say right here. For what we're gonna do right now is that what I'm trying to let you know, guys, is that when you want to enter this market, when you want to trade step in this, you can get these two indicators, just the two moving averages. First thing you need to do is to go to the daily time frame. If you want to trade long term, you go for the daily time frame first. You check out the indicators, which are you check out the indicators. Remember, when the black moving average is above the red moving average, it indicates a sell. So at this point, the black moving average is above the red moving average. It gave us a sell, you can see. So this black moving average is for long-term purposes, and the red moving average, it occurs fast. Yeah, but for both of them, they can both work the same thing. So what you do now is that when you want to trade step in this, you go for the daily time frame. You observe and see the black moving average. If it's above the red moving average, that shows you that the trend is a downtrend. But if the black moving average is below the red moving average, it tells you it is an uptrend. So guys, those are the first point to note, so you can trade in the direction of the trend. I hope you know this, guys. Trade in the direction of the trend, which we are doing right now. We're trading in the direction of the trend because the black moving average crossing above the red moving average tells us that the overall trend is a downtrend on a daily time frame. So moving down to my 15-minute time frame, I can see the intersection almost about to happen, like as you all can see as well, that the black moving average is about to cross above the red moving average, so the trade can be activated. So nevertheless, always trade with good risk management. You can see this is a $100 account, but I'm using just a 0.1 lot size, so you can calculate how much you're going to risk and how much you're going to lose. Like you all know, the trade, well, it can't always go your way, so you always need to have a stop loss position, know how much you can risk, your risk slash gain ratio. So what I'll do right here is that I'll go to my 30-minute time frame and then I'll set my stop loss. So as we all know, calculation of pips for stepping this, let me put it on 1 hour time frame. Calculation of pips for stepping this. With the analysis of this market, the market is, this should be the take profit, breaking this resistance level. Yeah, breaking this support level, guys. This should be the take profit level. Let me mark it out, very important. Okay, yeah, so TP level at 8798.8, that is the take profit level for this trade. So what should be the stop loss level? Stop loss should be above this above the resistance level. Yeah, above the resistance level that has been holding this market, holding all the trades that hold this market from this point, hold it at this point, hold it at this point, and still hold the surviving candle. So that should be our stop loss level. So it means that we're trading on a 82. Remember, the entry is 8822.4 and the 80 and the stop loss is 8841. So which means we're risking about 20 pips. Risking about 20 pips on stepping this to gain about 70 pips. Oh, sorry guys, that's a mistake. Let me set up this again. Moving down to the 15-minute time frame. Okay, yeah, since it's crossing above, so moving to the 15-minute time frame, you just simply zoom in to get it appropriately, guys, to get it correctly. Zoom in so the trend can be equal. Look, 15-minute time frame, it's already crossing. The black moving average is already crossing the red moving average to indicate a sell position. So this should be your stop loss at this point, 88.30, since the market is still on a downtrend. So if the market is going to move for a consolidation, it shouldn't break out this level, because if it break out this level, then probably it's going to reach up to this point, which we won't want to wait for. So we'll put our stop loss at 8830. Ask the stop loss for this trade. Then the take profit level, let me simply mark that at 8830 for the stop loss level. Okay, 8830 as stop loss level, and TP level at this resistance point. Guys, the resistance level will serve as the support level, will serve as the TP level, which we'll be using for this trade. So set out stop loss at TP level at 8798. So which means we'll be risking a $10 to gain $30 if you are using this lot size 0.1. Means you'll be using a $10 to gain $30. Yeah, so guys, if you're using the same lot size as I'm using, means you're risking a $10 to gain $30. So this is for you to know good risk management. If you have a bigger account, if you can risk more, you can also do that. If I double this, Adding another 0.1 position means I'm risking $20 to gain $60. So I know I'll be adding more positions later on this trade, but I won't be risking my capital. Instead, I would love to be risking from my profits. Yeah, I would love to be risking from the profits, whereby the market moves to some point like in a profit of about $10 or $5. I can add more positions at a pullback. When the market gives me a pullback, I add more positions. In the pullback, I add more positions. Yeah, so that is a very good concept of trading. Risk management, guys. Risk management is is very, very, very important. Trading is very, very important, guys, where you trade. So because that would be the only reason why you won't keep on funding accounts. Otherwise, you have to be funding accounts. So if you don't want to be funding accounts, make sure you have a very good risk management skill. Exactly, guys. So we're looking at this. This is the stop loss level, and this is the TP level. Nice. A one ratio 3 risk slash reward ratio. This is it, guys. So if it hits the stop loss, or it goes to the TP level. So that's what we're doing right here. Forex success, guys. Make sure you can take this trade right away. If you see this video right now, you can take this trade. Take this trade, guys. It brought to you by Forex success. Take this trade. Just say step in this. We'll follow the daily time frame. It has been a very long trend, very downtrend. You can see very long term sell for stepping this. So we are following the downtrend, guys. So you can take this trade right now and risk a $10. And if you enter now, you can see I'm already on $2 loss, 2 pips loss. So if you are entering now, you can equally be risking it. You'll be risking about $8 to gain $30, to gain $32. Yeah, exactly. So if you're using a one lot size like what I'm using in my big account, in my main account, guys, if I'm using one lot size, then I'm risking $100 to gain a $300. As capable as you are, you can do that and make money for yourself. So this is Forex success, guys. Thanks once again for watching. We'll bring in more strategies to